Decided to leave the repo rate unchanged at 5% per annum.
It came as little surprise. The Reserve Bank opted to leave the rate intact. Since its last meeting in March, the rand has lost nearly 2% against the dollar. The inflation rate rises as much as 0.2 percentage points for every 1% decline in the rand.
It's becoming increasingly unlikely that we'll see an interest rate cut this year. The big factor there right now is the currency. The currency is so weak, and when you cut interest rates at a time of currency weakness like this, you actually risk the currency getting even weaker. That raises all sorts of inflation problems, growth problems, and so on.
The MPC noted its concern about the prospect of above-inflation wage settlements. Coupled with disruptive strikes, it will have negative implications for growth and exports.
The problem is that if the demands are not met quickly, this usually deteriorates into a violent negotiation, and that definitely has a negative impact on investor sentiment, and you need capital flows coming to the country.
The bank expects inflation to average 5.3% this year and 5.2% next year. It predicts fragile local growth prospects because of low consumer confidence, disruptions in the mining sector, power supply constraints, and a weak global environment. Diabosito, SABC News, Johannesburg.